Good day. My name is Daniel Malan. I'm the CIO of Regarding Capital Management. I'd like to talk to you today about 5 topical issues at the moment for investors in South Africa. The first one I'd like to talk about is the currency. We know the rand's been selling off quite aggressively of late. The way we look at currencies is that we use a long-term PPP model, purchasing power parity, to calculate more or less what we think the rand is worth, and our model indicates that the rand is worth, relative to the US dollar, approximately 9.50. So this means that at the current 10 rand and change, we think the rand is slightly undervalued. So there's not much in it. It is true to say that the rand does move quite aggressively around its fair value over time. So of course there's a possibility that the rand could sell off further. It is not important to us what the rand does in that sense. What is important is that we are, from this point, not prepared to act on investment views around further weakness in the rand-dollar exchange rate. The second thing that is topical to investors at the moment is that there's been quite a significant sell-off in the property and bond markets in South Africa over the last couple of months. This is important. These are large investable asset classes, and potential distress in these asset classes may represent investment opportunities for you, our client. We are ready. We're excited about this. You don't own any of these asset classes at the moment. They are not yet offering good value, and we are just patiently waiting, and we have got lots of cash in our portfolios, and if there are decent opportunities, we will definitely act on them, and we'd love to be able to tell you about those. The third thing that is topical in the media a lot lately has to do with labor and labor unrest in South Africa. And really the only point I would like to make is that it is nothing new. South Africa has been dealing and coping very well, by the way, with labor in South Africa, for the last 100 years or longer. We do not see any reason why there's anything different structurally in the South African economy that's going to make labor more and or less of an issue in the future than it has been in the past. And we think that there's no need to panic about that. The fourth thing is there's a lot of talk about the risks of a bubble in unsecured lending. The only business that we own with direct exposure is JD Group. So our fund exposures to unsecured lending as a whole is actually quite small. That said, any sector where there are dramatic price declines will attract our attention. And as a result, our team's done quite a lot of work on the likes of African Bank and Lewis and other stocks in the sector. And we are increasingly optimistic about investment opportunities in that area of the markets, but we have not yet allocated any further fund capital to those ideas. Then the fifth thing, the last thing I wanted to talk about, is that there's been a significant rally or a bull market in Japanese equities, which of course will influence our clients in our global balanced funds and as well as directly in our global fund. That market has rallied very, very strongly. Of course, it's on the back of a 20-year bear market in Japanese assets. As you know, we have partnered with a investment management firm in Tokyo who are deep experts in the local market. And it's our opinion and their researched opinion that those Japanese equities still offer good value. And as a result, our global fund, for example, remains slightly overweight Japan relative to the MSCI world. And the last point I'd like to make is that we don't really concern ourselves with being underweight or overweight certain sectors or countries or anything of the like. The most important thing to us is, of course, whether or not the assets are cheap and predominantly of high qualities. So in conclusion, these are 5, this is a short description of 5 topical and important considerations for our clients at the moment. Thank you very much.